Don't.
Don't what?
Don't give me hope.
Ladies and gentlemen, do you want the good news or do you want the bad news? Well, you can't respond because it's a YouTube video. And thankfully, I'm not yet schizophrenic by the market, so I don't hear any response from you at the moment. But I'll give you the good news first and then the bad news. The good news is Bitcoin has held on to the weekly chart bull market support band. More than held on, actually. It's bounced from it quite significantly, which is a great sign for various reasons. And that means that at this point, the macro structure is still intact. We'll discuss that today. We'll also discuss what it means, that weekly candle close, in terms of structure. We had a bullish engulfing candle, quite a strong one, right into a pretty bearish candle for a very strong wick to the downside. Does that mean anything? And then secondly, well, the bad news, unfortunately, is although we've seen this bounce from support, there is no real strong evidence at this point that this is anything but a dead cat bounce, right? Now, that doesn't mean run for the hills, throw out your bags. Doesn't mean any of that. Doesn't mean you should stress. It just means that we haven't quite done enough yet. We actually are seeing a short-term breakdown at the moment, which is not too pleasing to see. Before we dive into it today, go ahead and check out the Bitunix Exchange. It's a global exchange. It's non-KYC. You do not need a VPN. So every single issue you might have with accessibility is solved off the bat. Doesn't matter where you are in the world, you can use it. Email address and a password is all that's required at sign up. And if you sign up using my referral link down below, you'll get a 15% lifetime trading fee discount. This is an exchange, by the way, that's never been hacked before, not a single security breach, no instances of customers losing their funds on the exchange. It's been around for 5 years. So that's a very good track record. Use that link down below to sign up, help out the channel, and help out yourself with that link. Appreciate it, guys. Let's get into the content. Starting with the weekly candle, and starting with the bull market support band, which really is the indicator I've been looking at quite closely on Bitcoin. I'm basically not convinced that the bull market is over until this bull market support band is broken on a weekly chart level, or until we lose $107,000 on any major time frame. Obviously, this wick the other day was a liquidation wick. That doesn't really count as a fake out. But 107,000, in my view, is a region of relatively strong importance on, say, a daily candle basis, something like that. And then the bull market support band is a very important indicator on a weekly candle basis. And we know this is the case. We can go back through Bitcoin's price history. We can see what's happened with the bull market support band, historically speaking. I've done it so many times, you're probably sick of hearing it. It's been retested in Q3 of every single bull market before bounces to all-time highs. Historically speaking, right, it happened on a neckline of support, bounced to all-time high in Q3 after September. This cycle, it happened in 2021. There's the bounce from the neckline of support in September specifically to all-time highs. Shouldn't even say Q3. It's more specific than that. It's more precise than that. It's actually September exactly each cycle. There it is again, bounce in September on top of a neckline to all-time highs. So there is a pretty clear trend that the bull market support band is tested in September. It's happened 3 times now, and we go to all-time highs after the retest, and we basically aren't in a confirmed bear market until that bull market support band breaks down. There's the breakdown after a retest, and there's the confirmed bear market with resistance retests, and that's also when the altcoin market crashed. And the same story in 2017. The altcoin market only crashes after Bitcoin gets its actual breakdown, and the bull market support band historically has been a massive part of that. Now, I see no reason to believe it to be any different this cycle. Now, I'm not sitting here and saying that I'm massively bullish. I'm actually not buying. I'm actually quite cautious in the market right now. And the reason I'm cautious is because, well, we did see an October top, and the October top was expected by the 4-year cycle. And so, well, that could be the top. We just don't know it yet. We don't know whether we're going to top out later in October, or we've already topped out on that 6th of October wick. We just don't know. And so the only way to validate that that was the top is to wait for an actual breakdown. And I don't think we've seen that breakdown yet. That's why I'm looking at the bull market support band so closely. And that's why, of course, it's a weekly candle indicator, because it's comprised of the 21-week SMA and the 20-week EMA. And the fact that we have held on to that level on the weekly candle close, even though we were below it yesterday, is good to see. It means we don't have a confirmed macro breakdown at this point in time. It's actually quite interesting how in-depth you can go into the shorter term and medium term price action. I haven't done this before on this YouTube channel, but I'm going to do it today. This range of price action may look relatively I don't even think it does, actually. I was going to say it may look relatively simple. I guess it doesn't. There's quite a few different lines here, 2 diagonals, 2 horizontals, and a basis of support in green. It's a very important range, and it's a very nuanced range. Now, the nuances of this range, first and foremost, let's plug in what the lines are. These 2 white lines go back to 2017, cut across 2021, cut across the price action this year, and the top one actually marked highs on 3 separate occasions here, right, all of which were all-time highs. The second one is kind of a dividing line. It cuts through the price action mark to the highs in 2024, and we saw 2 rejections from that line just recently. Now, what's important about these 2 diagonals, as well as this green support zone at 107? Well, first and foremost, this green support zone at 107 is essentially the bull market support zone. This level up here that we've rejected from is essentially the bull market resistance zone, and this level in white is kind of dividing the range. So we've got this entire range of price action between the bull market support over here and the bull market resistance here. This white line divides the range, cuts it in half, and turns it into kind of a bullish zone of the range in which we're looking to attack all-time highs, and a bearish zone of the range in which we're attacking the bull market support. So we've got kind of 3 or 2 separate regions to this range. We can even cut it, further. We can chop it up further. We can add in these red lines. Well, one of them's at 114,000.8, which is the level we're actually holding right now. One of them is at $121,000. Now, these red lines further divide the range. Instead of being 2 elements of the range, the bullish side and the bearish side, there's actually now 1, 2, 3, 4 elements of the range. And all of them are on a gradation of bearishness to bullishness. Now, again, this is very complicated for a video about basically an update in the weekly candle. But the reason I am not convinced that this is anything more than a dead cat bounce at this point, and what is a dead cat bounce for people who don't know? A dead cat bounce is essentially what happens when you're on the way down and you see a little bounce before continuing on the way downwards. Okay, now I don't even think we're in a bear market yet because I haven't seen a breakdown of the macro support, but I'm also not sitting here and saying we're definitely going to highs. I'm kind of taking a relatively neutral position on the market right now. I'm accepting the fact that we are in a macro upwards trend while not making any immediate term bullish claims. I'm simply waiting for confirmation of bearishness. And if that confirmation comes, awesome. If it doesn't, awesome. We're in a position in which we can be very reactive. Right now, I just don't think the bulls on the short-term level have proved themselves beyond anything other than they've proved the bull market is not yet completely over because we've held that bull market support band support. What I mean is, I don't think this small little bounce from the bull market support band has really proved anything. It's not like this little bounce here has made me say, okay, we're going to all-time highs again. We haven't. We haven't seen any of that proof. And the reason being is because, well, we're still in the bearish part of the range. The range can be segmented into 2 pieces or 4 pieces. And whichever way you segment it, well, we're still in the bearish part of the range. If we segment it in 2 pieces, and if we segment it into 4 pieces, we zoom into the price action here. We've actually just seen a triangle formation, which was a bullish pennant formation, break downwards. And now we are dropping back into the 4th part of the range, which is the most bearish part of the range. And that's been validated by a momentum flip to the downside on the 1 hourly chart RSI. So if anything, Bitcoin is looking to retest its bull market support band again. And we can only hope that that retest ends up being some sort of higher low at the very least before swinging upwards again. But at this point, yeah, there's no real reason to believe that Bitcoin is all good just because we've seen this small bounce. There's no reason to believe that. I think that Bitcoin is still in massive danger and still basically looking to hold on to the bull market support band, which is basically the bare minimum that it needs to be doing to maintain any hope for this macro bull market. So my conclusion in this video is essentially, yeah, it's awesome that Bitcoin has held on to the bull market support band for the weekly close, but we need to see something more than that. Because the clock is ticking. We've got the 4-year cycle here, and yeah, look, we can see a top anytime within the next 3 or 4 weeks with the cycle. We've got some degree of time, but we can't be wasting it, right? That's not a massive amount of time. And we need to see, of course, the short-term flip bullish so that we can start predicting higher prices. At this point, we're just simply not there. At this point, we're still basically crossing our fingers that the bull market support band will hold. We're still basically crossing our fingers that will hold on to the bare minimum and maintain the macro bullish structure. So I will sit here and I'll say, I am not convinced that we are in a bear market yet, as per the charts, because we haven't seen a macro breakdown, which is the only thing that could validate the top, especially given the 4-year cycle has a broad date range speculation. But similarly, I'm actually not sitting here and saying that we're definitely going to all-time highs because we haven't seen enough evidence for that either. So I'm in this kind of weird middle ground, which I'm sure a lot of you are in as well, in which I'm not willing to accept that it's quite over yet, but I'm also not immediately short-term bullish. I think the Bitcoin is still under threat here, and I think that this very well could be a dead cat bounce. Interestingly enough, Ethereum has also bounced from its bull market support band, as has the total cryptocurrency market cap. So none of these charts have seen a macro breakdown. Total very clearly has horizontal support here. Ethereum has the same kind of horizontal support zone. It's not like the market is in this massive, big cyclical breakdown. It's simply not there yet. And the huge bearish claims I don't think are justified at this point. But at the same time, it's not like we're, short-term bullish here. We're definitely under threat. In tomorrow's video, I'm going to do a deep dive into the altcoin market. A lot of you guys seem to want to hear that from me. I made a video on altcoins about 7 days ago. Not a whole lot has changed, but of course, now that we are deeper into October, there are a few more things to say about the altcoin market. And specifically, I'll dive into the question, what do we need to see for something good to happen there for altcoins? Because it's been a lackluster season, a lackluster cycle as a whole for altcoins. And of course, people are still crossing their fingers. So I'll discuss that tomorrow. Thank you so much for watching, guys. I really hope you enjoyed the video. If you did, check out the Bitunix Exchange. Also leave a like, comment, subscribe, etc. But, Bitunix, great exchange. It's global. It's never been hacked before. These things matter a lot. And those two things alone actually make it better than most of the exchanges in the market. I'll tell you that for free. This is the exchange I use personally. And if you want to sign up, you can use my link down below, which will grant you a lifetime 15% trading fee discount. So every single buy and sell you make will be discounted by 15%. You'll save big money with that link. You also help out the channel quite a lot by doing that. So use that link to sign up. Appreciate it, guys. I'll catch you tomorrow with that altcoin video.